Hi traders, this is Forex Nelson and I'm back again today with another training video for my Pip Sniper trading system. Today's date is April the 14th and this video will be called Great Trade Setups. It'll be about 30 minutes long and I'm going to show you exactly how to trade the market successfully and all the secrets that I know. So it's quite simple, easy concept to understand. One of the most important things is that you have to have a trade plan. This happens to be for today, April the 14th. Very important that you know whether you should be buying or selling, and sometimes you have mixed signals like up and down. Many times it'll go down first, hit support, and then go up with the higher time frames. So once you understand how to work the trade plan, understand the concept of it, and then of course you're going to be looking for nice looking trade setups, which I'll be showing you plenty of examples, both on the Forex and on the futures. So remember, very important that you have some kind of a plan. And if you don't know how to put one together, well, just get in contact with me and you can get your hands on this one. Keep in mind, I do charge $100 a month for it, moving forward. Now, basically, the concept is quite easy to understand. You want it to qualify for a great way to trade. In other words, goal line going downward and the momentum is red, in other words, below the waterline. And then, of course, you want to see some blue candles coming back to the moving averages. And of course, you want to see, if you're selling, the 10 below the 30. So once it comes back to hit, all of these are triggers. So if you pull the trigger here, your stop is right there, about 20 pips. And of course, it did bottom out with about 120 pips. You see, when you get everything lining up properly and in order, you're going to start finding you're trading at a much higher success level, like the way mine is, which is hovering around 95%. I spent many years, and I spent a lot of money on training and education. And by the way, speaking of training and education, it's important that you keep getting your education about every 2 months. Keep buying and keep buying until finally the light bulb goes off. And for myself, it took more than 8 years by the time I started finding any level of success. So I don't want to scare you off, but you know, this is very difficult to do. I would label it as being more difficult. I'm not 100% sure, as I'm not a doctor or lawyer, but if 100% of the people applying to be doctors or lawyers, probably 95% will become a doctor or lawyer. And there's a reason why in trading, well, it's the reverse. 95% of the traders are failing. Well, that's because they don't put in enough time. They don't spend enough money. Because if you're going to become a doctor or lawyer, you're going to spend 7 years and I don't know what it costs, $250,000 or whatever. So trading, you can certainly understand the concept that you're going to spend more than a couple of $100, and it's going to take more than 60 or 90 days to find success. So remember, the 3 ingredients to find success is you need a lot of chart time. You're going to need a lot of demo trading. And you're going to need a lot of education, as much as what you can afford. And, just keep getting your hands on education. And I have a lot of education. So just get back to me and we can talk about continuing your education. That's a very, very good tip, by the way, and please don't forget that. So anyhow, that was a nice move on the way down with a pretty small stop. What was that? Around 120 pips. Not a bad return. So moving on to the next trade example, Euro CAD. You want to see the two moving averages like a nice gap diverging. There's the arrow saying to sell, qualifies for a great way to trade as the momentum is red. Wait for the pullback. So here, here, here. There's no right or wrong. Just get in the trade. Stop is like around 20 pips. And it did eventually bottom out with about 56 pips. So, but for me, if I can get 40 or 50 pips, I'm generally happy with that, as I'm doing 5 trades, 10 trades, and my goal, I'm trying to get 200 pips every day, and that's what makes me happy. So whatever makes you happy, and then close the trade when you are happy. Moving on to the Euro Yen. All the examples are exactly the same. You want to see goal line going up and the momentum blue. Bit of a pullback. There's the arrow. And by the way, this is Asian. You trade exactly the same way for all 3 sessions. There's the pullback, hitting the moving average, just get in. There's your stop, 10 pips. And of course, for this Asian, that is more than 60 pips. And there's many mentors out there and traders telling you, don't bother with Asian. But when you see this setup, it's about 95% it's going to go. And make sure you have your trade plan in order, so that qualifies for an up move. Okay, here we go. Euro New Zealand, same thing, nothing changes. Right at this line here, goal line's going down, momentum is red. So any kind of a pullback, like here, here, and here, hits the moving average. Let's say you pull the trigger here. There's your stop, about 16 pips. And away it goes according to your daily trade plan. Did bottom out with about 130. And I would say that is pretty good. Personally, myself, if I get around 60 pips, as I don't want to be trading until lunchtime or whatever. Just get in for a few hours, grab the pips, and be done trading for the day. Okay, moving forward to the euro dollar. Here's another example. 2 moving averages have crossed. They're diverging. And of course, gold line is going down. Momentum. Everything qualifies for a great way to trade. London push. There's the pullback I'm waiting for. Get in. Stop is about 10 pips, not too much. Made another move, pullback, another move, and that's like 40 pips. Keep in mind the euro dollars doesn't move a real lot like the pound pairs or the futures. It's more of a slower moving pair. And always keep an eye on the meter, and you can buy the one at the top against like not right now, it's very late in the day. It's actually 5 p.m. And speaking about 5 p.m., which is right here, 5 p.m., at this point, you have to start dealing with swap rates. You're either going to give the broker money or they're going to give you some money. And usually, the broker will take 3 times more money than what they're going to pay you. If you have any questions about swap rates, just get in contact with your broker. Okay, let's run a check on the pound pairs now. Pound Aussie, right at this line right here, very clear. going up the goal line and the momentum's blue, qualifies for a great way to trade. Look at all the buy signals down at the bottom. So any kind of a pullback and hits the moving averages. Now if you drop it down to the 5 minutes, all these candles will be right about here. Anyhow, you will pull the trigger. Stop is, 20 to 27 pips, whatever you're comfortable with. And then away it goes, and it just keeps going and going and going. And, at this point, you're up 90 pips. But for me, if I can get 60 or, 70, I'm okay with that. Okay, let's move on to the pound CAD trade. This is exactly what you're looking for. Two moving averages in proper order, going down. Momentum is red, qualifies for a great way to trade. So when it gets around the moving averages here, here, and here, and here, and here, you can pull the trigger with a 20 pip stop. So in theory, you're risking 20 pips and you're getting more than 70 to the bottom. And when the trade setups look exactly like this, and your daily trade plan is actually telling you to sell, well, away it goes. And so just remember all those rules, and you'll do great as a trader. Moving on to the pound Swiss. Here we go. Two moving averages have crossed. Goal line's going up. And the momentum is blue. So when it comes back into this T area or the moving averages, just get in the trade. Stop is within 10 pips. There's the arrow. Remember your trade plan, don't forget that. And then it just continued to keep going and going with over 100 pips. Excellent return for a very small stop. Okay, let's check out this pound yen. Love trading the pound yen, and we happen to be looking at the Asian time frame right in here. Look at this huge move. Don't let anybody ever tell you you can't trade Asian, because when the charts look like this, you're going to get a move. So the goal line is going up slightly, and the momentum is blue. So there's the arrow telling me that the higher time frames are saying to buy. So remember, once you get the push and a signal down at the bottom is a buy signal, everything is blue, then you're just gonna, if you get in, especially by the time it gets to this area, you can pull the trigger with a 10 pip stop approximately, and it did top out right here with 100 pips. That's not too bad. Excellent trading for the Asian time frame. These are all great examples of great trade setups. Pound New Zealand. Look at the pound New Zealand, top left corner, average daily range. 172, well, today did 100. So, let's see now. Market is moving down and the momentum's red, qualifies for a great way to trade. All I'm waiting for is a pullback as close to the goal line as possible. Look at the stop, 10 pips for the pound New Zealand. To here is 60 or 70, and down to here is like at least 110. When you see this perfect doji, London close, well, time to close the trade, because at this point in time, expect the pullback to hit the goal line eventually. Think of this goal line as a nice, like a powerful magnet. Price every day comes back and hits it. And that's the great place to pull the trigger for buying or selling, right around the goal line. Okay, pound dollar, let's run a check on that. This is exactly what you're looking for. Moving averages are going down and they're diverging. Momentum's red, qualifies for a great way to trade. 6 o'clock in the morning, I'm doing my daily trade plan. telling me from the higher time frames I want to be selling. That's why I put an arrow in there, just so I don't forget. And then get in as quickly as possible. As soon as you get the sell signal right on the next candle, you're in the trade with about, 16 to 20 pip stop. And then you're just going to stay in the trade until, you're bottoming out here with about 95 pips. And then remember, London close, dies out, and eventually it does the pull back to the goal line. No big surprise. So as it's dropping, make sure you always take a quick look at the meter here. And in this situation, it'll be either the pound as a driver, very, very weak, 20 or less, or the US dollar, 80 or more. And once you get 100 or more pips, there's a good chance that you're going to have 2 bus drivers. And then you'll start collecting plenty of pips and you'll be a very happy trader. Okay, let's move on to, let's see now, dollar CAD. Dollar CAD, now decided to show this one. It was a little bit lagging by the time the 2 moving averages have crossed. And then, of course, make sure you're, let's see, right from here, goal line is going down slightly and the momentum is red, qualifies for a great way to trade. There's the arrow. Let's say the daily weekly is sell or down. So it breaks through here, comes back and kisses it, entry 1. All of these are entries, and all of these 2 candles are entries. Let's say you get in here. Look at your stop. I'm going to do more than 4 pips, but you get the idea. Very, very small stop, and it did bottom out here with 60 pips. And for the dollar CAD, not too bad, as the dollar CAD doesn't move, a lot like the pound pairs. Okay, now we can get into the futures. They move the most and pay the most. Again, nothing changes. You want to see the goal line going up. Nice gap in between the 2 moving averages. This is the T area right in here or here. And you want to see the momentum blue. So any pullback. So here, it's all the same price. Stop is on the other side of the goal line. Now that's 53 actually, and keep in mind that a 10 or 20 tick stop will, you got to give it more than 10. Look at it, it only went 10 against you right there. But anyhow, it just continued to work its way up, and across the top here, just for the math, let's say you get 350, and 350 times, because it does pay $10, that would be equal to $3,500 if you did 1 standard lot. Very important that you have the charts looking exactly like this. In other words, not messy, not going sideways. Moving averages are not braided. When it looks like this, along with your daily trade plan, you're going to find a lot of winners. Okay, let's run a check on the DAX 30. Okay, exactly the same thing. You see the goal line is going down. Everything is looking good. Momentum is red. So all we're waiting for is any kind of a bit of a pullback. So entry, all these candles are entries, including these 2. So let's say we get in about here. Stop is like, and don't freak out about 200 because you're going to get a lot. Once the market starts moving, your daily trade plan is definitely telling you to sell. There's the arrow. And don't forget, if you want to double your account, if you're doing 1 standard lot, the magic number happens to be 1, 3, 3, 4, which is about there. Once you hit that, you're actually going to double your $5,000 account to $10,000, and this ended up paying out over $2,000, 10 times more than your stop. And if you do 2,000 times, it pays $3.75 for each tick. Well, definitely going to need a calculator, and I'm sure you can figure that one out on your own. Love trading the DAX 30 along with NASDAQ and Russell, as those three pairs there has every day, day in and day out, huge payouts. Okay, let's move on to the Dow Jones. This one pays $5 each tick. Two moving averages are crossing, goal line's going up, and the momentum is blue. Another qualification for a great way to trade. Now every time it comes back and touches the moving averages, you can get in. Here, and here, and here. Let's say you do it here. Look at your stop, about 30. It's not too bad. And it did top out with about, well, need a calculator, but let's assume that it's 400, so I can at least do the math. If that happened to be 400 times 5, 4 times 5 is 20, that move would be actually just shy of $2,000, providing, of course, if you did one standard lot. Moving on to gold. Gold now pays $10. So let's see. Gold line's going down. Moving averages look perfect. Momentum's red, qualifies for a great way to trade. Here's your pullback. That's what you're waiting for. There and there. You're in. Didn't even go one tick against you. This looks like about 40. And look at down at the bottom. It actually, let's see, gold, that's 250. And of course, 250 times 10. That looks like it'll pay $2,500 if you did one standard lot. Make sure when you have a nice move, don't walk away from the computer, as many times you'll be giving a lot of the profits back to the market. Okay, NASDAQ. Love this trading this pair as it pays $20 each tick. Soon as you see this great setup, moving averages are touching, fresh bounce, whatever you want to call it, way it goes. Goal line's going down, red momentum, everything is good. Now, of course, if you drop it down to the, and maybe I can try that. So make sure you bring that little cursor in the left corner and put it right there. It's there right now where the line is. So if you want to see these candles right here, all of these candles actually much closer to the goal line, then you drop it down to the 5 minutes. See, it's hitting there, all through here. These are all entry points. Let's see now. If you pull the trigger there, you're looking at, ignore the last two digits. Let's go with about 30 pips stop. And it did bottom out here. Oh, by the way, if you want to double your account on the NASDAQ, the magic number is 250 right there. So if you manage to get that 250, if you did one standard lot with a $5,000 account, and by the way, you can even do the same thing with a $500 account. Your $500 account will become it'll double to 1,000, or it'll double to 10,000. So it just depends on your account size. You're going to trade maximum lots, and when you hit the magic number of 250, you are going to double your account. Moving on to Russell. This one pays $10 a tick. Moving average is crossed, the goal line's going up, and the momentum is blue. Perfect for a great way to trade. Here's your pullback right here and here. Let's say you take the trade there. Well, you got about 28 tick stop, and away it goes. And it did eventually top out. Oh, and by the way, the magic number for doubling your account on Russell is 500. So when it gets to about there, guess what? You just doubled your account from $5,000 to $10,000 if you did one standard lot. And then, of course, remember, London close, one more little bounce here. Nothing wrong with grabbing another 120 ticks. And then eventually the party's over. And once you get below here, the water line, and it's red, well, and everything is red down at the bottom from here. Everything is red. This is just going to keep going, and you can collect a few hundred more pips on a sell position. Okay, let's check out this S&P 500. It pays $5 a tick. Goal line's going up, moving averages are in proper order, and the momentum is blue. Wait for the pullback here, right into T area. There's your stop. Looks like around 40 something, 43. And away it goes according to your daily trade plan. Now let's say you end up. So let's see what we're going to end up with. It looks like it's hovering around, well, just for the math, let's round it out to 600 times $5. If you did one standard lot, that would be approximately $3,000. Remember, trade management, because eventually it just decided to tank. Now, if your 4 hours is saying to buy and the daily, weekly is saying to sell, well, once it hits strong enough resistance, then it's going to do a complete pullback and, of course, a reversal after it breaks through the goal line and keeps working its way down. Okay, so trade management, very important. Get that in order. Let's see now. Silver. Silver pays $50 a tick. And remember, you're not going to see huge numbers in here, but you can still, make some money. A nice little gap right in here. But first thing I would notice is that the goal line is going down and that the momentum is red, and there's the arrow reminding me higher time frames are telling me to sell. So I must wait for the pullback, and it didn't do a lot of pullback, but let's say you pull the trigger there, 10 tick stop, risking 10 to get about almost 70. And if you happen to get the 70 times 50, if you did one standard lot, well, looks like 35, so that's $3,500. It's not too bad at all. And then remember, once you're getting buy signals, TZ is going up, remember, price always goes back to the goal line. And many times it'll just keep going and going for another 70. So you could have made 3,500 down, and you can make 3,500 going the opposite direction. Okay, we're getting closer to the 30 minutes. We can do this 30-year bonds. Nothing changes. Charts have to look exactly like this. Moving averages are diverging. Goal lines going up. Momentum is blue. Qualifies for a great way to trade. Everything is good. All we're waiting for now is the pullback. Remember our trading plan telling us to buy. There's the arrow. Now, once you're in the trade, stop is about, 13 or 14 pips. And then it just continued to work its way up. It's 122. It's 130 something. That's 140 something. Times 5, whatever that is. This one doesn't pay a lot and it doesn't move a lot. So I believe that's around 700, something like that, if you did one standard lot. And again, I'll just repeat, make sure you are trying to line up your charts exactly the way I showed you. As in these videos, great trade setups, and of course, don't forget your daily trade plan. because that is very important also. So anyhow, I do believe that just about wraps up this video. We're at 30 minutes. And of course, if you have any questions, well, just get in contact with me. And of course, if not, good luck with your trading. And of course, we'll see you in the next video.